Hello, everyone. I'm Matt Clark, research analyst for Money and Markets, here with this week's Stock Power podcast. Now, today I'm going to discuss a power stock that provides key refrigerant services to commercial, industrial, and residential customers in the U.S. Now, I know that doesn't sound all that exciting, but trust me, you're going to want to hear more about this. The timing is actually great for this as we are getting into the summer months across the U.S. It's getting hot, it's getting sticky. And this stock, it rates a 99 on our stock power rating system. Now, before I get into that, I want to make sure that if you do have a question about any particular stock or the broader market, you can email us at feedback@moneyandmarkets.com. We'll put that right down below. And you can ask your question to either myself, Adam, Charles, or all three of us. And if we use your question in an upcoming video, we're going to hook you up with some very, very cool Money and Markets gear for free. This includes hats, t-shirts, sweatshirts, all sorts of great stuff. We're going to hook you up with that. Just send us a question, and if we use it, we're going to get you squared away. Now, make sure you also head over to moneyandmarkets.com. It is your home for safe, sound, smart, simple, profitable investment information for your portfolio. On the site, you can check out our stock power rating system. It rates thousands of stocks based on 6 fundamental and technical factors. You can create your own watch list. You can track your stock performance and get all of our in-depth analysis on there, and you can do that for free. Now, on with today's podcast. The summer months are here, and I live in South Florida, so I can tell you for sure it is hot, it is sticky, and it is just, I don't know, it's just hot. And you know, when that happens, it means, you know, there's cookouts, swimming pools, summer vacations, all sorts of great stuff. But it also means that millions of Americans are going to be looking for ways to stay cool. I am also one of those. June, July, and August are the months when we focus a lot on our air conditioning. We want to make sure things are up and running. We want to make sure things are cooling properly. We want to make sure that it all works, because the last thing you want is for it to be 100 degrees outside and your air conditioner decides not to work. So whether it's in our vehicles or in our homes, we will spend thousands of dollars making sure we have cool air, and we won't even bat an eye about doing that, because that's how important it is to us. Now, we can capitalize on this with a company that rates a 99 in our stock power rating system. Its stock is in maximum momentum mode while keeping us cool during these hot summer months. Heating and ventilation and air conditioning market, which is also known as HVAC, is poised for global growth over the next several years. Market data firm Mordor Intelligence, which is no relation to Lord of the Rings, said the HVAC industry was valued at about $57.8 billion in 2020. Now, by 2026, that value is going to grow to $82.5 billion with a compound annual growth rate of 6.1% from 2021 to 2026. In today's podcast, I'm going to share with you a power stock that provides refrigerant services to commercial, industrial, and residential customers, primarily here in the U.S. Now, refrigerant, if you're not aware, this is what basically keeps our air conditioning systems, whether they're in your car, in your house, or they're big ones that are on top of your apartment building or on top of your office building. Refrigerant is what keeps those air conditioners working at peak performance. It basically is what helps cool the air that blows through the air unit. The COVID-19 pandemic actually pumped the brakes on the supply of this chemical, as plants around the world were forced to basically stop production because they had to kind of send workers home. They didn't want people working on the line. It's the same story we hear across manufacturing in 2020. We heard it all before. It's basically what happened to even refrigerant. Now, the industry is starting to roar back, especially as we head into the heat of these summer months. In 2021, Americans used about 272,000 tons, that's a ton, no kidding, of refrigerant to keep air conditioners running. Now, a study by Grandview Research projects that usage to jump to 344,000 tons by 2025. That's a 26.5% increase from 2021. So in about 5 years, we're going to see a 26.5% jump in the amount of coolant that we use. Now, in this episode, I'm going to share with you a top company in our stock power rating system and tell you why it is a strong contender for your portfolio. Its 99 overall rating means that we are strong bullish on this refrigerant stock and expect it to beat the broader market by 3 times over the next 12 to 24 months. The stock is Hudson Technologies Incorporated. It trades on the Nasdaq. Its ticker symbol is HDSN. That's HD as in dog, SN. The company provides refrigerant products and services to commercial, industrial, and residential customers, all basically here in the U.S. They do a little bit internationally, but most of their business is done right here in the U.S. It includes refrigerant sales, reclamation of recycled bottles, things like that, decontamination in the event of spills, and they also service refrigeration systems. And then, like I said, they do this for commercial, industrial, residential, and even government customers they work for as well. HDSN HDSN scores a 99 on our proprietary stock rating system, stock power rating system, which means we're strong bullish on the stock and expect it to beat the broader market by at least 3 times over the next 12 to 24 months. It scores high on our growth factor. In fact, it tops out at a 100. It's got a 1-year annual earnings per share growth rate of 667.4%. Let me repeat that. 1-year earnings per share growth rate annually, 667.4%. Massive. And its sales growth rate during that same time, 30.6%. The stock is a great value. It scores an 84 on the metric with a price to earnings ratio that is half its peer average. That means it's trading, that price to earnings ratio is half what the rest of its peers are at right now. Another metric this stock really shines on is momentum. Over the last 12 months, HDSN stock has climbed 228%, beating its peers, which have only grown about 5.1% on the average during the same time. Now, more than half of that growth has come just since March. HDSN from March 2022 to today has jumped 144%. Basically since March 8th. That's exactly when their rally started. And now they're up 144% since that time. So basically in 2 months, it's grown 144%. It's really showing that maximum momentum that we love to see in stocks. And there are big things expected for the future for HDSN, HSDN as well. The COVID shutdowns did see total annual revenue drop for the company from about 162.1 million in 2019 to 147.6 million in 2020. But the company rebounded and posted a 30.5% gain in revenue in 2021. By 2023, HDSN is expected to have total revenue of 324.2 million. That's a 68.2% jump from its record set in 2021. Huge gains coming up for Hudson, I think. The hot summer months are here, and the need to recharge your air conditioners is there. And this company is growing hand over fist, not just in stock price, but also in its fundamentals. So this is definitely a company to take a hard look at for your portfolio. It's HDSN, Hudson Technologies Incorporated. Now let's look back at our YouTube poll question from last week. Last week, we kept it simple. We wanted to ask if you were still working from home. 37% of you who voted said that you were no longer working from home and you were back to the office fully. Another 31% said that you were, in fact, still working from home. 21% said you're working from home, but going into the office sporadically, maybe a day or two a week. 12% of you, surprisingly, said that you basically quit your job when it was demanded that you return to the office. So 12% of those who voted said, yeah, you know what? I'm good. I'm going to quit. I'm going to find another job. I like working from home. We also received some comments on remote work. Thomas said, I've been lucky enough to be able to work remotely from home as a pharmaceutical marketing and business consultant for the past 10 years. Before that, I was in the office every day as I went from one successful startup to the next. That got too exhausting. I can understand that. Dennis added, I've been working remotely since 2005. Wouldn't have it any other way. A report from Axios on Monday suggested that more corporate executives are actually looking to end remote work, but workers are kind of pushing back, saying, "No, you know what? We're more compatible with remote work. We like it. We like the flexibility. This is what we want." It all kind of came to a head after Tesla Incorporated CEO Elon Musk suggested that workers for Tesla either have to spend 40 hours a week in the office or find another place to work. So this is going to be very interesting, kind of a tug of war between workers who are trying to leverage that remote work and corporate executives who are saying no more. Let's bring everyone back into the office. Thank you to everyone who took part in our weekly poll. Remember, you can vote each and every week on our poll on our YouTube page. Just go to YouTube, look for Money and Markets. If you're not already there, under the community tab, you will find our poll question right there at the top. If you do have a question about a particular stock or maybe the broader market or the economy for myself, Adam, or Charles, or maybe all three of us, we would love to answer your question. Email us at feedback@moneyandmarkets.com. We'll flash that down below. You can also comment down below here on YouTube. Either way, if you do send a question and we use it in an upcoming video, we're going to hook you up with some free Money and Markets gear. We've got hats, t-shirts, sweatshirts, all sorts of great stuff. We will make sure you get hooked up for participating in our videos. Also, head over to moneyandmarkets.com. Sign up for our free daily e-letter if you haven't already. We like to give you safe, sound, smart, simple, profitable investment information each and every day. Also, we're working on getting signups for my Stock Power Daily email, where 5 days a week, Monday through Friday, I give you one highly rated stock you need to look at for your portfolio. It's all right there on moneyandmarkets.com. You can check out our proprietary stock power rating system, which is where I get a lot of the information from. You can use our metrics to get the ratings of thousands of stocks. Just go to the website in the top right-hand corner of the homepage, just type in the stock in the search bar. You can use a ticker or company name, and then you'll be able to pull up the rating of the stock, fundamental data, stock chart. You can add stocks to your personal watch list. You can track their performance. You can do all that stuff for free at moneyandmarkets.com. That's all for me this week. Until next time, this is Money and Markets research analyst and host of the Stock Power podcast, Matt Clark, wishing everyone safe trading.